Welcome to Market Matters. I'm Nadia Hassan together with Khoo and Wei Lynn Tang sitting in the corner. It's a good, after so many days of good, it's today not that great. I mean, how do you feel? Were you persuaded by last week?
Well, it's rally fatigue, right? If you have 105, 110 point surge in the last 7 working days, clearly you're going to, even a sprinter runs out of breath, right? Even Usain Bolt's going to stop after a while, so.
Yeah, well, we'll have to see whether or not this continues. But there's a whole host of stuff coming up this week. Wei Lynn actually has been reading about it, so what's happening?
Okay, so on the local front, the FBM KLCI today was actually green all morning. It was actually up 13 points intraday, but actually failed to actually sustain the gain. So it ended the day actually just 3 points up at 1,709 points, still above the 1,700 level. Volume of some 2.09 billion shares, worth 2.2 billion ringgit traded, right? So I think last week was a very good week for the Asian equity markets. So after 2 weeks of selling, foreign funds actually turned net buyers of Asian equity last week. So in relative terms, I think Indonesia and Thailand, they made the biggest gains. So Indonesia was the biggest gainer in terms of the amount foreign funds actually bought into was actually highest in a week. You saw the rupiah gaining the highest as well. And I think the government announced a third stimulus last week, but it's expected to announce, I think, another round sometime this or next week. Thailand as well, foreign funds bought into mining stocks, which actually beneficiaries of the recovery in oil price. But zooming to Bursa Malaysia, after selling for 2 straight weeks, foreign funds actually they bought 783 million ringgit. Now they've turned into net buyer. So this is the highest amount since May 2014. So this actually reverses the previous weeks where they were actually net sellers. But to note that despite that, right, for 2015, the 10 months, the cumulative net foreign outflow is still 17.6 billion ringgit. And this is actually like, I think more than double, or 6.9 billion ringgit outflow of the whole of last year. I think in terms of budget 2016, which will be presented on October 23rd. So Afin Huang in a report today I read that actually stated some of what it sees that the proposals to come up with. So basically it expects budget 2016 to be generous. So it expects actually more cash assistance to low-income households. Government unlikely to pre-announce another cut in corporate income tax, and also obviously for the government to stay committed towards fiscal consolidation.
Generous to who?
Generous to
who?
I've never seen a budget being described as stingy, okay?
Right, but if you were to zoom into like stock specific, CMB in a strategy note today, just to share a bit, actually in a strategy note, which it says must own stocks for long-term investing, so between 3 to 5 years, right? So for larger caps, it likes RHB Capital, Harta Lega and Gamuda, and for the smaller caps, CMB Research likes GHL Systems, MyEG Services, and Only World Group Holdings.
All right, thanks a lot for that, Wei Lynn. So moving on to our hot stock of the day, talking about plantation and generous people. We're looking at Innoprise Plantations Bhd, up a staggering 16.5% to 1 ringgit and 62. And I suppose the reason why it was amazing is because this stock's really tightly held, right?
Yeah, this is going to come from the Lego movie, right? Everything's awesome. But that rise was actually on the back of really, really thin volume, just about 53,000 shares. Now, this is strange because they rose on the day when they announced a cash call, right? A two-call rights issue for loan repayment and working capital purposes.
Actually, that's what the interesting thing was, right? 36, as you said, 36.5 million. They're raising money in these kinds of times. I mean, I looked at their earnings. Well, not their earnings. I looked at their borrowings. It is about 30 million. Their cash is only about 2 million. Okay, I suppose I can understand why you're going that way. But again, yes, this is the funny thing about Malaysia, right? When we have bonus issue, you see the share price rise. Although fundamentally nothing ever really changes. So when you have a cash call and it rises, you wonder.
Well, like my good friend Kun Yu Yin says, right, he's not really bothered about anything else other than the fact that if the company makes more money this year than last year, and next year from this year, he's going to keep on buying, right? And the thing is, this is a company which is starting to go, and Wei Lynn Tang is giving me nice smiles, it's a company that is going from not much to an all palm business, right? They've got about 23,000 hectares. They've got about 13,000 which are suitable for planting. And right now, they've planted about 13,000 already. And about half of that is already matured. So they're on the cusp. And they've reported quarterly earnings which are already a good deal higher than last year. So they're on the cusp of probably, in fact, more probably than not, better earnings this year than last year. So.
Yeah, that's fine. But why the jump in the share price despite the thin volume? Again, I'll bring it back to what we said at the beginning. It is tightly held. So who's buying? Are the shareholders playing with themselves?
I struggle to see how institutional funds will be buying because the thing, to start at the start, right? TSH Resources owns about 21% of the stock. Yayasan Sabah owns about 51% of the stock. So combine those two entities, have about 73% of the company, right? Which doesn't leave much more for anyone else, right? So if you can't get in meaningfully and you can't get out meaningfully, then who is driving up the share price? The owners probably, right?
Yeah, exactly. So the thing was also that looking at palm oil in the term, MPOB came up with some stats today. We were looking at stockpiles going down. Exports, no surprise, it's actually gone up. But I don't know. I think for me, if you look at plantation, although CPO's gone up, I still think it's a little bit murky. But just to sort of bring it all home, yes, they're proposing to raise about 36.5 million in a 2 call rights issue as well. They've actually commissioned this new plant, which actually commercial operation on the 18th December 2014. Share price, as we mentioned, up, but volumes are actually very, very thin. So that's one thing to work out for. And the question is, who's buying? But moving on to our stocks of momentum, and the reason why we carried this theme is because we've got 2 for you today. The first one is Teck Guan Perdana Bhd, yet another plantation company, just bleeding into what we said last. Pegged with negative momentum, but up some staggering almost 30% to 1 ringgit and 36. Fwah. I mean, I looked at it and just went, fwah. What's going on?
Well, the thing is, now this sounds like a bunch of people have gotten behind the stock and decided to push it forward, right? Because September 21st was when the interest really began to take place. The stock is about 70 cents then. Today it closed at 136, up by 31 cents. That means it's doubled in market value in 3 weeks, right?
Yeah,
it's gone from 20-something million market cap to about 50-odd million ringgit market, 54 actually, which is tiny.
But does that freak you out?
No, because again, I want to sign Mr. Khoo Yin. Right?
Okay, he's your best friend, man. It's gonna be, okay. The fact is, for me, if you looked at it going up in 3 weeks and there's an absence of news, for me that pushes the panic button a little bit.
Okay, so because some might say, because CPO is 98% of this company's business, right? 2% is basically a cocoa, right? If you believe the trend saying that CPO is the next play after furniture makers, and you can say that the CPO price is on a spot basis has recovered from about 1,900 ringgit per metric ton to about 2,300, 2,400 today, and it's still going to go up, in line with global demand. Then yeah, there's a story to be had there.
Yeah, well, I'm going back to this whole numbers that just released this afternoon. Malaysia's September CPO the output still has fallen. Inventory, of course, fine, it rose a slower pace. I think that's good for people, right? Because that means you're not stockpiling as much. But actually, output still fell, by 4.5%. I don't know. I think we need some time to sort of go through these numbers.
To which I would just reply to you, Nadia. Q2 earnings on 25th September reported was up 43% on the year. Profit after tax is 2.6 million ringgit, a swing from a loss of 1.9 million a year ago.
So this
first half revenue, although still lower than 128 million from a year ago, but PAT of 5.5 million ringgit was already more than twice the year ago number. So it's the right direction, and if you're an early buyer,
for me, I have to see whether they actually continue. But we're moving on to something next. Our next stock with momentum is essentially Fajarbaru Builder, also pegged with negative momentum, went out a little bit 2% to about 47.5 cents. So yeah, the interesting thing about them was late July, they said they want to undertake 3 property projects worth about 728 million GDV. It's spread across Puchong, Sentul, and they're doing one in Malacca as well, and as well as you have one in Australia. So little property company that could. Do you think that would be an apt headline for them?
Yeah, why not? I mean, they started life as a construction business. They do earthworks and so on, and it's a logical conclusion for them to move on to property development. It is a big game, no development. It's a big risk. Your balance sheet must be able to withstand the financial pressures of the capex involved. The kicker here for me is the fact that they've got this maiden project in Melbourne, Australia, right?
Yeah.
Where they've got a JV called Fajarbaru Builder. Okay. It's about 80 million Aussie dollars, which is about 216 million ringgit, a luxury condominium project. And we know that Australia is creaking under the weights of an overheated property market. Now, is it wise and right for them to go into that market when A, they don't really know their way around as a mature developer, and number 2, for them to go to a new country, which is quite risky?
Well, okay. If you ask me, property here is risky enough already. You are not the big guys. You're not your SP Satir. If you want to go and overseas and expand your wings, what's wrong with that? What's wrong with actually going overseas and actually looking at the opportunities there? Because these projects will not be like tomorrow. They will still be years from now, right?
Well, it depends. It depends on how aggressive you are. And according to the big bosses there, Executive Director Chan Jia Hing, he said that they've sold about 80% of the units in Melbourne already. So
yeah, I'm
always stymied about how they compute. Does it mean an expression of interest in terms of just a booking of 1,000 Aussie dollars, or is it your loan having been obtained? It's quite nebulous, that those computations.
Well, okay, just to bring everything back together, the first one, of course, we talk about is Teck Guan. Looking at them, right, pegged as negative momentum. They actually came back from the black a year ago, which made Chuang very happy, apparently. And outlook for CPO, as far as I can see, still looks a bit murky. In flat yields, I think that's what people are sort of worried about. Moving on to, of course, to Fajarbaru, they are pegged as negative momentum as well. They have 3 projects in the pipeline worth about 728 million ringgit. Australia seems to be an interesting part for them, but there are still worries on whether or not they can adapt to the times and whether the property market is actually ready for them.